Stocks close mixed on Wall Street even as yet another meeting on the raising of U.S. debt ceiling ends in a stalemate. Stocks in the Asia-Pacific trade largely higher. The SGX Nifty suggests a positive start for the Indian market. In a first-of-its-kind meeting, the RBI top brass gets into a huddle with the board of directors at public sector banks. RBI warns that bad loans are made during good times, asks banks to remain vigilant. The exercise to exchange or deposit the 2,000 rupee note starts today. Banks will exchange up to 10 2,000 rupee notes at a time till the 30th of September, while there is no limit on the amount of money deposited. Also, IDs and KYCs will not be required for deposits or exchange. Prices of electric two-wheelers are set to rise as the government cuts subsidies. Demand incentives are cut from 15,000 rupees to 10,000 per kilowatt hour. Cap on incentives is reduced from 40% to 15%. The changes will be applicable to all electric two-wheelers registered after the 1st of June. And strong volume growth is likely to drive what is expected to be a robust fourth quarter for Ashok Leyland. In key results to watch, Biocon, NMDC and Dixon Tech will also be reporting numbers today. Hi guys, good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are all of the top headlines that we have for you as we get into this trading session. There's lots for us to talk about, but first up, let's take a look at what's going on across the markets right now. We did get a positive handover, in some of the US markets at least. So on the back of that, you have Asia, which is quite mixed right now. A few of the markets have slipped in the past few minutes, but you have some which are holding up well. What's doing the best right now? You have the Nikkei market, so that's seeing a gain of 0.7% right now. Korean markets up around 0.6% as well. Seng, like you can see on your screen, we're around 60 points higher there. But for some of the other markets, so the Taiwanese index is down around 0.25%. You have the Shanghai markets, which are seeing a cut of, similar around 0.25% there as well. So looking a little bit mixed across Asia, but no big moves really coming through. The SGX Nifty will be up on your screen, and it is indicating that the start for our own markets will be positive. We're at the day's high as well. 30 points higher is where we're at on the SGX Nifty. So that's what's happening across Asia. But let's also talk about the US now. We had mixed cues coming in from Wall Street, like I was pointing out. So the Dow was, around 140 points lower. That's where the pain came through. But the S&P 500 was absolutely flat, and the Nasdaq Composite actually closed a little bit higher. So it was around 60 points in the green to end the session. Now, Monday's moves brought the tech-heavy index to its highest close that we've seen intraday since August. So that's important to watch. The Nasdaq closing 0.5% higher there. But staying with Wall Street and ahead of the May Fed minutes, which are due tomorrow, let's listen into some important opinion. This comes in from Minneapolis Fed President on inflation and where really he sees rates going this time around.
Even though we keep getting surprised about how high inflation has been, how entrenched it has been, how slow it is coming down, markets seem very optimistic that rates are going to fall. Now, I think that they believe that inflation is going to fall, and then we're going to be able to respond to that. I hope they're right, but nobody should be confused about our commitment to getting inflation back down to 2%. I think right now it's a close call either way versus raising another time in June or skipping. Some of my colleagues have talked about skipping. Important to me is not signaling that we're done. If we were to skip in June, that does not mean we're done with our tightening cycle. It means to me we're getting more information. Do we then start raising again in July, potentially? And so that's the most important thing to me, is that we're not taking it off the table. Since the 7 or 8 years I've been on the committee, this is the most uncertain time we've had in terms of understanding the underlying inflationary dynamics. So I'm having to let inflation guide me, and I think we're letting inflation guide us. It may be that we have to go north of 6%. Let's see what happens in the underlying services economy. Let's see what happens in the inflation dynamics. But if the banking stresses start to bring inflation down for us, then maybe we're getting closer to being done. I just don't know right now.
All right, it's going to be a close call whether to hike or pause in June. That's the word coming in. But staying with the U.S. market, with less than 10 days to go before the United States runs out of funds to pay its obligations, U.S. President Joe Biden met with House Speaker Kevin McCarthy at the White House to discuss a deal in order to raise the U.S. debt ceiling ahead of the fast-approaching June 1st deadline. So although no consensus was reached at this meeting, the House Speaker did say that the meeting was productive and professional, and that both leaders have also acknowledged that the use of mandatory spending caps actually remains the main sticking point in all of these negotiations. Let's listen into some of those comments.
I felt we had a productive discussion. We don't have an agreement yet, but I did feel the discussion was productive in areas that we have differences of opinion. We're going to have the staffs continue to get back together and work on some of the things that we had talked about. So I think we both agree we want to be able to come to an agreement. We both agree on the areas that we know there's disagreement on, but I think it was productive in the professionalism, the honesty with one another, and the desire to try to find common ground.
All right, that is the word from the U.S. House Speaker, and that's what we're tracking globally. But let's now talk about all of the individual cues that you should track as we get into this trading session. Our research team is here with the trade setup. Mangalam, Abhishek and Vivek all join me now. Guys, a very good morning to all of you. Vivek, let me come to you first. You know, there's so much going on, whether it's globally or domestically. Run us through what are the key points to track today.
Well, absolutely right. You know, as you mentioned, quite a lot of news flow that we've highlighted at the start of the show. So U.S. markets ended quite mixed. You know, European markets too followed suit, ending quite mixed. Yesterday, crude oil prices actually saw a bit of a gain, and that'll be something to keep an eye out for. Brent futures gained over 0.5%, now trading closer to the $76 a barrel mark. Now, when you're coming to the Indian markets, you know, how are these cues affecting our own markets? Yesterday, Indian markets actually gained, and it was on the back of the fact that IT stocks as well as the entire Adani Group stocks saw quite a bit of a lift up in the session yesterday. On the other hand, Nifty Bank actually underperformed after a while. Broader end of the markets moved in tandem with the Nifty and actually saw a bit of an up move. Now, today, what are the important cues to watch out for? Remember, we're winding down towards the end of the results season. Quite a few numbers, but most of them are, you know, not in the Nifty or towards the broader end of the market. So, result reactions today from BPCL, Steel Cement, important to track. Earnings today, some important names like Ashok Leyland as well as Dixon Technologies would be reporting their earnings. Asian markets, you know, mixed start. SGX Nifty indicating a slightly positive start for our own markets.
Okay, slightly positive start. We're around 28 points in the green for the SGX Nifty. Vivek, thanks a lot for that. Let's now hand it over to Abhishek, who's going to take us through the entire list of stocks that we should watch for. And Abhishek, it is a long one.
Well, it is a long list. To start with, Vedanta board has approved a dividend of 18.5 per share. This worth amount-wise about 6,877 crore. The record date is May 30th. So, JSW Steel, they are implementing the resolution plan of National Steel and Agro Industries Limited under IBC. The deal size is worth 621 crores. Results-wise, Shree Cement is in focus. Their results on EBITDA front is a miss. EBITDA came in at 893 crore. We were working with a poll of 932 crores. So margins saw a decline to 18.7% when compared to poll of 20.3%. HEG, the revenue is down 8% YOY, EBITDA is down 21% YOY, and the margin has also declined by 220 basis points on a YOY basis. Camden Fine Sciences, the net profit is down YOY by more than 39% despite the fact that revenue is up nearly 9.5% on a YOY basis. Now, PB Fintech, the net losses have come down to 8.9 crore when compared to nearly 220 crore in the same quarter last year. The revenue is up 61% over there. EIH Limited, the net profit has come in at 84 crore when compared to 14.8 crore in the same quarter last year, and the revenue has more than doubled to 637 crore when compared to 301 crore in the same quarter last year. Fusion MFI, the AUM growth is pretty robust over there, 37% YOY and about 7.5% sequentially. The net interest margin has expanded both YOY and quarter on quarter. Indiabulls Housing, their stress asset or the gross NP ratio is perhaps the lowest that you are seeing in last 6 quarters. It has come in at 2.86% when compared to 3.3% in the previous quarter. The AUM growth on a sequential basis is pretty robust at more than 11%. Back to you.
All right, Abhishek, thanks a lot for taking us through that entire list. We're going to watch for all of these in today's session. And finally, it's over to Mangalam, who's looking at all of the cues from the futures and options space. Mangalam, it was quite a good start of the week, right? Barring maybe a little bit of pressure in the banks.
Yes, it was a good start to the week. In fact, if you just take a look at the key indices yesterday, the Nifty ended over 100 points, 18,300 was conquered. And this despite the weakness in the Nifty bank. And that's because of the IT index. In fact, we pointed that out yesterday as well. The Nasdaq's outperformance could do well for our IT index. In the last 2 sessions, the IT index is up nearly 4% odd. And that's an index I'll be watching out for today as well. FIs are back in the cash market, so that's a relief. Both the FIs and the DIs bought in the cash market yesterday. The net institutional flow was close to around 1,500 crores. In index futures, while the net buy was just 39 crores, here's where the crux of the data is. If you look at the details that the NSE has given, they bought 676 crores in the Nifty futures, whereas they sold 637 crore in Nifty bank futures, and that's explaining the sort of weakness that we're seeing in the Nifty bank itself. In index futures, they added 6,200 longs, presumably all of them on the Nifty, whereas they added around 4,600 shorts on the Nifty bank, as a result of which their long-short ratio at 48.52 remains virtually unchanged. They bought more calls than puts, so any sort of up move beyond that 18,350, 18,400 would lead to a further short covering, as we did see in yesterday's trading session beyond 18,200. So let's see what happens out there. But at the same time, we saw some call selling at 18,300, 18,400 as well, telling you that if the previous resistance holds on, then we may go back lower as well. It's Fin Nifty weekly options expiry today. The Nifty bank was weak, so let's see how the financials pan out in today's trading session. And also, let's take a look at the active options. Yesterday, the up move was led by short covering in the 18,200 call writers. They were caught on the wrong side. But we did see further writing in 18,200 put and 18,300 put. And were the markets to go ahead and cross the previous week's resistance, we will perhaps see a bigger move. And that's where the call buyers have been active. So 18,500 call comes up for you. Punt buying for about 11 rupees a pop. Levels to watch out for on the Nifty on the way down. 20-day moving average, important support. And the recent high of 18,459 is an important resistance.
All right, Mangalam, thanks a lot for running us through all of those cues from the futures and options space as well. With that, it is time for our first short break on the show. But when we come back, we're going to bring you an important story. The RBI top brass met with the board of directors of public sector banks. We're going to bring you the details in just a bit.
Yes, it's okay for us to nod for everything. Because we are parrots. Yes, but your wealth manager? Shouldn't be doing that. You know?
Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
Zedlac Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
My dad has won a medal for bravery. He's a major in the army. He protects everyone. Karan, what does your dad do?
Rohan, your daddy.
Karan, tell us now.
He's an LIC agent.
That's great. Imagine what if something untoward happens.
So?
Well, Karan's dad provides proper guidance to protect our family's future.
We are proud of our million-plus agents who continue to protect countless lives. We welcome you to LIC. Visit your nearest LIC branch.
Welcome back. You're still tuned into Power Breakfast, and now in a first-of-its-kind meeting, the top brass of the RBI met the boards of public sector banks in New Delhi. So over 100 bankers were present at the meeting, and RBI has urged banks to remain vigilant on bad loans in good times. Ritu Seng is here with more details. Ritu, what was really the message that the Reserve Bank is trying to send to banks?
Well, this was a first-of-a-kind such meeting, the top brass of RBI meeting with the board of directors of public sector banks in New Delhi yesterday. A day-long meeting with participation from more than 100 attendees. You had RBI Governor Shaktikanta Das, all the deputy governors, EDs from the Department of Regulation and Supervision participating in the meeting, and the focus primarily was on governance and ethics-related issues. And banking executives we spoke to said RBI emphasized on the role being played by boards and asked them to have a more proactive approach. There was a lot of emphasis on risk management, and in the backdrop of the Silicon Valley Bank-led crisis in the West, RBI asked banks to remain watchful of any asset liability mismatches or inconsistencies and asked them to ensure that they take all steps to protect depositors. RBI also said more vigilance was warranted by boards, especially when it comes to the risk function, stressed on the need for boards to have a longer-term vision and not a myopic vision when it comes to both assets and liabilities. An emphasis was placed on the need to strengthen risk and audit committees, more oversight by boards who were encouraged to ask more questions of the bank, seek data, clarifications wherever required. But RBI also warned banks to be careful of the current euphoria in the environment and the tendency to take unnecessary risks in good times, which could lead to a bad loan build-up later. So the overall message to the boards was be proactive, remain vigilant, and keep depositors' interests in mind at all times. Now, we understand RBI will next hold a similar interactive meeting with the boards of private sector banks in Mumbai on the 29th of May.
Okay, Ritu, thanks a lot for getting us all of the highlights from that meeting. But another important story that we're looking at, electric two-wheelers may become more costlier. This is from the 1st of June. The government has slashed the subsidies on electric two-wheelers under the FAME scheme. So the demand incentive on these vehicles has been reduced to 10,000 rupees per kilowatt hour. And this is from the 15,000 rupees that we had earlier. Pariksha joins us now. Pariksha, tell us more about this and how much of an incentive cut are we talking about overall?
That's right. The government has slashed the electric two-wheeler subsidy under the FAME scheme from 40% of the vehicle cost to 15% of the vehicle cost. Subsidy per kilowatt hour has reduced from 15,000 rupees to 10,000 rupees. This new structure will be applicable from the 1st of June. We're learning from our sources that the electric two-wheeler allocation under the FAME2 scheme, which was 2,000 crores, was getting exhausted, and that is why the government has decided to make an additional allocation of 1,500 crores for this fiscal by drawing funds from the electric three-wheeler subsidy under the FAME2 scheme. The FAME2 scheme itself comes to an end in March 2024. Having said that, how is this revision in subsidy structure going to impact electric two-wheelers? There will clearly be a price increase. According to sources, the prices could increase from anywhere between 11,000 to 45,000 depending on the model, the battery capacity and the vehicle range as well. Ather Energy, we learned from sources, could increase prices by 30%. Okaya has said that they will increase prices in the range of 20,000 to 40,000 rupees. EV companies feel that this will impact the path to profitability, and the EV adoption could decline marginally as well.
All right, Pariksha, thanks a lot for bringing us all of those details. In fact, let's also bring you some perspective from the industry. We spoke with Anshul Gupta, the MD of Okaya EV, about the subsidy cut and what pricing could really look like going forward. Listen in.
We have been working out the entire pricing strategy. A lot of it depends on the competition as well, but the way we have figured out is that anywhere from ranging from 20,000 up to 45,000, we are expecting the consumer prices to go up on different models. However, obviously we have absorbed a lot of the cost that we could absorb as a manufacturer.
All right, they have absorbed part of the cost, but of course there is going to be an increase in pricing as well, which is likely to kick in from the 1st of June, like Pariksha was pointing out. But with that, it is time for a short break. When we come back, we're going to talk about all of the cues from the commodity market, so stay with us.
I always go for it. आप भी जरूर ट्राई कीजिए. Toodles guys. Good recommendations are helpful ना? They surely help me while investing with Angel One. आखिर influencers को भी तो जरूरत है smart recommendations की.
Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.
iPhone 14 Pro? Yeah. क्या डिस्प्ले है. Nice show by the way. लेकिन आप तो फ्लाइट में बोर ही होगे. What? See ना, एयरपोर्ट बस आने ही वाला है. And you haven't even downloaded anything. तो क्या ही करोगे? Watch people snow.
Not if I have Airtel 5G Plus.
So you've
already got it. Maybe you should get it too.
पंजाब बदल रहा है, नई रफ्तार से चल रहा है. खेतों में उम्मीद उगी है, खड़ी फसल गुनगुना रही है, गीत बदलाव के गा रही है, पिंड में भांगड़ा मचल रहा है. पंजाब बदल रहा है. मुश्किल से मिलते हैं मुश्किल में साथी, यहां तो हरदम कोई खड़ा है. हर मोहल्ले का अपना क्लिनिक, फ्री में इलाज चल रहा है. पंजाब बदल रहा है. मोहाली बस स्टेडियम नहीं, स्टार्टअप का भी हब है अब. टेक्नोलॉजी के इस शहर को सबने इन्वेस्टमेंट के लिए चुना है. हौसला यूथ का उबल रहा है, पंजाब बदल रहा है। आने वाले सुनहरे कल की देखो तो तैयारी। सरकारी स्कूल में अब तो शिक्षा मिलती है म्यारी। करप्शन पर जीरो टॉलरेंस, बिजली का बिल भी जीरो है। इस बदलते पंजाब में अब तो आम आदमी हीरो है। किया संकल्प के बदलेंगे, मंजिल पे जाके दम लेंगे। सोच नई, अप्रोच नई, नई रफ्तार से चल रहा है। पंजाब बदल रहा है। तरक्की का एक साल पंजाब के साथ।
Now is the time to participate in the growth of world-class companies in one of the fastest-growing economies. Beat volatility and make your money work for you 24/7 by investing in the best mutual fund schemes to meet your financial goals. Multiply your money by profitable investing in size from India's biggest mutual fund manager.
Bandhan Mutual Fund presents MF Corner at these times.
Presented by Bandhan Mutual Fund.
Welcome back. You're still tuned into Power Breakfast. And as promised, let's talk about the commodity space now. Manisha joins us with an update. Manisha, there's been a bit of a rise in the crude prices. What's really led to that?
Well, yes, a 1% increase overnight, and the gasoline prices trading at a 5-week highs with the U.S. demand at 2021 highs clearly have led to the overall energy pack rising on the higher side. So we are holding above $76 a barrel for the Brent crude oil prices. The markets also are watching as the supplies from OPEC and allies and Canada also decline in the recent few weeks. IEA, in any case, has warned of shortage of projections in the second half of 2023. And then we have seen the oil output at Iraq also decline for a second straight month. The only thing that's keeping the crude oil prices in check is the strong US dollar, which is still trading above 103. And that's exactly the reason that you have seen the metal prices also come under pressure. Copper is trading off its highs, very close to its 7-month lows, by the way, as streets awaits more China stimulus. There has been a lot of conversation from China stimulus, but we haven't seen much of that come in on ground. And that's the reason you also have the zinc prices trading at 2.5-year lows. Gold and silver prices have ticked lower in the last 24 hours, and we've seen newer lows being created on a monthly basis here.
All right, Manisha, thanks a lot for getting us that quick update from the commodity space. But in fact, here's some opinion as well. Speaking to CNBC-TV18, Fateh Birol, the Executive Director of the International Energy Agency, says he expects volatility in the oil prices in the second half of this year. So listen in to what he had to tell us.
We expect this year global oil demand will increase about slightly more than 2 million barrels per day. We may see volatility in the markets because of the demand might be very strong, especially second half, if we see that the not enough supply coming to markets. But I hope this volatility doesn't take place, because it is not good, especially for the developing countries. With the current expectations, we expect this year global oil demand will increase about slightly more than 2 million barrels per day, out of which 60% of it will come from China alone, which will put pressure on the markets, is 2 million barrels per day.
All right, that is on the crude oil market. Price is currently around $76.50 per barrel. But with that, we're going to wind down on this edition of Power Breakfast. The Asian markets quite mixed, like we were pointing out, but largely higher right now, with Nikkei and Kospi leading the gains. You have the SGX Nifty, which suggests a positive start for the Indian market. It has moved up a little bit, so around 25 points higher right now. Thanks for tuning in. Bazaar Morning Call up into